Yeah, you're welcome back. Good day, good day. Welcome back to our channel. We did market structure the last time, and I felt we should still go over that topic, market structure. But this time around, it will be more detailed. Okay, this time around, it will be more detailed. So let's talk about market structure once again. Okay, the truth of the matter is you actually have to understand market structure very well before you be a good trader, before you can trade the financial market successfully and make profit from it and staying profitable. If you fail to understand market structure, you're already having an issue already with the market. So when we talk about market structure, we'll be looking at various characteristics actually of the market structure. If we talk about market structure, there are two things involved. There are two things involved. One is trend, the trending, the trading market, while the second is the ranging market. Okay? The first is the trending market. Let's look at the trending market before we get to that of the ranging market. Now, you can let's look at under trending we have impulsive, we have expansion, and we have distribution. Sorry, distribution. So in a trending market, it's very clear. Either you call an impulsive move or an expansion or a distribution. These are just different names. Do you understand? Depending on depending on what you are actually looking out for. Okay? Depending on what you are looking out for. For the trending market, we have we have the upward or the downward movement. Okay? We have the upward or downward movement. Upward, which is called the bullish trend. Okay? It's called the bullish trend. Then we also have for the downward. the downward, which is called the what? Bearish. The bearish trend. Okay? We have for the downward, which is called the bearish trend. Now, let me explain how the bullish trend is. This is an example of a bullish trend. Okay? It's an example of a bullish trend. Okay? So, in a bullish trend, we have to note two things here. Sorry, trying to take this off. Trying to take it off, sorry. So in a bearish trend, mm, in a bearish trend, we have what? This is a low, right? The first one is a low. This is a high, right? This is a higher low. This is a higher high. This is what? A higher low. This is a what? A higher high. And this is what? A higher low. So a bullish trend have series of higher high and higher low. Take note of that. Very, very important. Take note of that. The bullish trend always have series of higher high and that of what? A higher low. That is to say that it must be able to take out the previous low. Now, this high is actually higher than this previous high, right? Took it out from here. Now, this other high is higher than this previous high. It took it out from what? From here. And this is higher. Took it out from here. And for the low, it keeps making what? A higher low. This low is higher than this previous low. This is higher than previous. So that's that for a bullish trend. Now let's see the vice versa. So you can either call this impulsive move, expansion, or what? Distribution. Now, it's the market does not just move in a straight line like this. No, no, no. If it's a bullish trend, it doesn't just go straight like that. No, it keeps making what? Highs and lows, like I've said. Okay. Let's take this off. Let's take this off. So for that of what? For that of the bearish trend, we have the bearish like this. Okay? So for our bearish, this is what? This is a high, this is a low, this is a lower high, this is a lower low, this is a lower high, this is a lower low, this is a lower high, this is what? Sorry, this is a lower low. Okay? So a bearish trend, which is a downtrend, it creates a series of what? Lower high and that of a lower low. So take note of the difference. The bearish trend, it creates a series of lower high and that of what? A lower low. While that of a bullish is what? Higher high and that of what? A higher low. Okay? Now this high here is lower than this previous high. This high is lower than this previous high. This high is lower than this. So the low is lower than this low. So this is what? An example of a bearish. So to know that your trend is bearish, it will what? It will look like this. I'm taking it off. I hope we are following. This is a beginner's class. If you are new to Forex, you can actually watch this video and you have an idea of what we are talking about. Okay? So let's see that of what? A ranging market. Now, a ranging market consists of, okay, let's just look at the other names. You can call it what? Contraction. You can call it accumulation. Okay? The ranging market, you can call it a contraction or what? Accumulation. Now, your range could either look like this, making what? Equal highs and lows. Making what? Equal highs and lows. Equal highs and lows. Equal highs. Still moving in what? In that range. Okay? Okay? So this is what you can say the market is what? Consolidating. You can add it to here. Sorry, I didn't add that. You can actually add it here that the market is what? Consolidating as well. Okay? So let's leave that. Okay? Okay, let me just add it. Consolidation. Okay? So This is an example of what a ranging market have making equal highs and equal lows, equal highs and what equal lows. So let's try to be fast so that our video will not be long. Okay. So with this, having this understanding of the characteristics of this market, okay, it's that means if your trend is bullish, you don't have any business selling the market, right? It's just what buying. You have to just buy because it's a bullish market. So since it's a bullish market, you just have to what buy. You have no business selling. And if it is a bearish market, you have no business buying. You only what? You only what? You only sell from the market. Because in a bullish market, only the buyers always win. Why in the bearish market, only the sellers win. Okay? So let's take a look at what we just explained in a chart, right? So it's good to start making your analysis from what the higher time frame. If you're an intraday trader, if you actually have time to be watching your chart, so you could be an intraday trader analyzing from the daily, having your setup from the H1 and making your entrance from M5. Okay, so let's just check our trend from our daily. Let's just start from our daily. Okay, now how do we let's check the trend. Now this is a high, right? This is a low, right? This what? The lower high, lower low. I hope you can see my cursor. Let me use, okay, let me just, you won't see it clearly. This is what? High, low, lower high, lower low, lower high, lower low. Now, you can use this lower low because he made an equal lower high here. This is equal. You can use this lower high, lower low, lower high, lower low, lower high because let's check it. It's the same range, right? No much difference. So lower low, lower high here, lower low. Now, if you look carefully, this was the previous lower high, right? Before this lower low. So markets broke this zone, okay? Market broke this zone and made what? A higher high here because this took out the previous high. So it's a sign that what? Our market structure has shifted from a bearish move to what? A bullish move. Remember I said for bearish, a series of lower high and lower low. For bullish is what? Higher high and higher low. Now it broke this previous high, made a higher high here, retraced back here. This is our what? Higher low. And it made what? A higher high here. So to actually so if you are entering this trade from this zone because because structure has shifted, so you are expecting what? An uptrend move. So to catch this move and to catch this move upward, you set your take profit here, right? Once it hits here, you're out, right? So we are going to shift now to a lower time frame to see if we can catch this move here. Let me let me just highlight the move, right? This is the move, right? Let's see if we can catch this move. Let me change the color. Okay, let's see if we can see this move. Meanwhile, there's a shift here, right? So here now we'll shift to, let's shift to our 1 hour. Okay, now so this is our move, right? We want to catch it. Now this is where we set the take profit, right? So we want to catch this move going up here. So let's view our market structure very well. Now it's made what? A higher high here, higher low, higher high, right? Higher low. It now failed to what? Take out this zone. Okay? It made what? A lower low because it took out this low. It made a lower low here. So from this uptrend, it changes to what? To bearish, a downtrend, right? It took out what? The low here, made a lower low, made a lower high. It made what? A lower low here. It made what here? A lower high. Okay? Made a higher low here. So now to be able to check your point, these are just fractals. So we'll make use of this one. Lower high, lower low. This one, it took it out here, right? It took it out from here. Let's see if it is equal. You're not forcing, you don't force the trade. Okay? So almost the same, okay? Almost the same. So we'll wait for the market to take out this zone before we look for a buy. So this will not get a buy here yet. We made what? A higher low here, made a lower here. It didn't take out this our high. It made what? Another equal higher low here. So when did it actually take that high? Let's check. Our high was taken here, right? It took the high here. So this now made what? A higher high. So taking out this high, we're expecting the structure has shifted to what? A buy. So we are supposed to catch this retracement. Okay? Okay? Took out the high. This retracement, that's where we will make our entering from. Okay? So if we can get the entering from this zone, you are riding it to this our take profit. You see that it's a massive pips. Okay? You are riding it right from here to this zone just with market structure alone. You see it now. Just with your market structure, you have caught how many pips for yourself. Hmm? So now I will show us, we'll get to our entry point, okay? I'm just showing us, I'm just showing us market structure alone. So if we can catch this pip here, there are criteria we'll look at to be able to catch this kind of a move, okay? There are criteria we'll look at to be able to catch this kind of a move. So now if this structure, if it has broken this zone here, if it has broken this zone here, if it has broken this zone here up, right? Meaning that there's a shift. So we are waiting for a retracement, right? To catch it because we already know that an uptrend wants to start. Your ability to catch the the immediate shift of market structure is a high probability trade. Okay, it's a high probability trade. So once you catch it, you write it here and it's So if that is clear enough, now if you see the market actually range here, range before it took out the zone, took it out. So that is it for what? That's how to analyze from your what? Your higher time frame, reducing it to H1, getting the structure shift. Okay, let's see, let's analyze, let's analyze another pair, right? Now from this pair, this is our what? Low. It made what? A high here. It made what? A higher high. Or better still, let's start from the bearish move, right? It made a high, a low, lower high, lower low, lower high, lower low, right? Lower high, lower low, lower high, lower low, lower high, lower low, right? Okay, lower low here, lower high, right? There's a point here, lower low. Then it made what? A lower high here. Then it made a lower low here, right? It now made a lower high here, okay? And it failed to make what? A lower low. Instead, it made what? A higher low. Now, this is our last lower high, okay? So, for us to consider a shift in market structure to start looking for an uptrend, it must break this what? It must break this zone, okay? So, it made the higher low. This is where it now broke the structure. Let me try to mark it. So this is where it broke the structure point from. Okay, so breaking this zone now. So this is our last previous high. Okay, so we'll mark here as our take profit zone. So we are trying to catch the retracement down, right? We are trying to catch this retracement. So we'll mark the zone, this retracement. We'll mark the zone. Let me give it another color. Okay, we'll mark the zone to be able to reduce to our H1, right? To see it. Now this is the break, right? Broke structure here. So market is trying to shift to the uptrend because we had a bearish move all this while. So this last structure, this last lower high was broken. So this retracement is what we will catch to ride it to this take profit zone. Okay. So we'll go to H1. You understand what I'm saying better. So this is our zone we marked. This is where we look at our take profit, okay? So now let's start analyzing. This is high, right? This is low. It made a lower high. It made a lower low. It made a lower high, lower low, lower high, right? Lower low, lower high. Watch carefully. Lower low, okay? Right? So now, where did this is the last lower? Let's mark it. This is the last lower high created, okay? Made a lower low here. Okay, this is the last lower low. If you can see, this is the last lower low. After making a lower low here, it failed to break this low. So this is the last lower low being created, okay? So it made a higher low here. It broke the structure and made a higher high here. Okay. It broke the structure and made the higher high here. But if you don't want to use this because it's not really that significant, we can make use of this zone. Okay. So this is our last lower low and it made here. Okay. The low here. Lower high, the lower low here. Then it broke structure and made what? It made a lower high. Okay. It broke this structure and made a higher high here. Now, if you use this higher high, the market retraced back. Okay. You can enter from here too. That's if you're using this last higher high. You can catch this retracement. Eh? You can catch this retracement and you will just ride it here, right? To this zone. But it didn't hit the take profit. It just stopped here and it reversed. So now if you are still in the market and it reverse, it will give you what? A loss there. Okay. But if you wait, that's why patience is actually key in structure. To get the clear structure and not fractals, it's good to actually get the main structure and not just the fractals is creating. Okay. So if you wait for this higher high, it actually came to our zone that we marked, okay, from the retracement. So, like I said, I will show us how to catch the entry from the retracement. So the thing what it made the higher high here after taking out this is our last lower high. It made a higher high here, retraced back. Remember, we are looking for what? A buy because we've already analyzed it on our daily, okay? And we've set our take profit here. So we are trying to catch the retracement here from this zone. So if you can catch the retracement from here, okay, and you ride it to this take profit, you see it's a massive pips, right? You are getting a very huge amount of pips. So that's the high probability trade, okay? So using market structure alone can help you to it can actually give you a massive what? A massive pips. So I will not really want our video to be long so that we can actually watch it, okay? Or should I just take one more example? So our bearish high, low. Sorry, let's start again. Our high, our lower low, lower high, lower low, lower high, lower low. So you actually say that what? Um, it's a bearish, right? Because it's making series of lower high and lower low. Lower high, lower high, lower low, lower high, lower low, lower high. It failed to take down the low. Is what? Higher low. So this is the last lower high. So this is where there's a shift in structure. Okay. So now if there's a shift in structure here at this point, sorry, if there's a shift in structure here at this point, and we are looking at this zone, the last higher high created as our take profit, okay? If you are looking at that as our take profit zone, this zone, okay? So we are trying to catch this move, the retracement downward, because since we saw that there's a shift in structure here, we should anticipate that there will be a retracement for a higher low for us to ride, okay, to this take profit. So if we mark this zone of the retracement, if you mark this zone, If we mark this zone and go to our H1, now you see the structure is very sweet, right? Now, if you mark this zone and go to our H1, what do we see? This is our take profit. So we are trying to catch the reversal to ride it up. Okay, so let's start. This is our high, this is our what? Low. Okay, lower high, lower low, lower high, lower low. It came and retraced in the same point too, and it created what? Our lower low here. Okay, lower high, lower low, lower high, but it failed. But this is just fractal. So let's use this as our main structure. Okay, let's use this as our main structure. So it took out the high from here. It took it out here, right? Made a high here. But if you check now, the retracement is what? It came down from, after making the high here, it came down to make a higher low here at this region from market opening. Okay? So if you ride it from this market opening to our take profit, you see there is a massive pips. Okay? You see it's a massive pips after taking out the high, made a high here. You will wait for a retracement to catch and you ride it towards this take profit. So it actually works. So immediately he hit the zone, he saw that it came for another retracement, okay, and ride again to the next level. So that's our high probability trade. So you have to practice this to actually get to understand market structure very well. So I believe with these few examples, you can practice on your own. The more you practice, the better you get. Okay. So thank you for your time. Thank you for your patience. God bless you. Even as you practice, even as you subscribe to our channel for more of this, you have to keep practicing as well. So thanks so much for your time. We'll see next time.